Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract. Yesterday's close was Thursday, December 11th. This is Friday morning. Kind of a choppy week. We're looking at our intraday dynamics here, and the first thing that we notice is kind of a divergence here on Tuesday. Monday we did get kind of a nice little surge into the close. We'll call it about 20-30 points, which was pretty impressive. Did give back about half of that, but we at least did have some congruency in our indicators. Fully bullish here, accelerating bullish here, bullish here, bullish here, and we did get the nice pop. However, come Tuesday, didn't quite get that. Got the opening gap lower open, went to fill it, tried to blast above the trend after filling it, but just ran into the resistance of the high of the prior day. Came back down, and before all that action happened, you'll notice down here we had an extreme divergence in our primary indicator, and to the negative side, suggesting that although this was bullish and the market was certainly surging, selling at the high of the prior day was certainly a good idea. That was at 9:15 in the S&Ps. Again, an extreme divergence here on Tuesday. The actual bearishness began to accelerate once we broke below the trend. Chopped around here for a little bit, and an inverted W once led to a nice little move to the downside. 905 down to about 885. So we're getting some really impressive moves in the mini S&P. Wednesday. Again, just a split decision, and as you can see, the price was certainly a result. The price action was certainly a result of this split decision. Again, we have a little bit of bullish here, but this is back to bearish. Choppy here, very choppy here. Just really a go nowhere market. Again, going into Thursday, got the same scenario. Opening gap lower, trade a little bit lower, hold at the lower of the prior day, go back up, chop around, and again got the surge to the downside just like we did on Tuesday. Again, accelerating bearishness once the trend was broken, and you get a nice little move from 895 to about 865, closing at 875 on the S&P. So just a very choppy environment. That's a look at the intraday. We'll go ahead and switch over and look at the. I'll just close that. And we'll look at the, let's just bring this, we'll bring them all back up. How about that? No. Here we go. There we go. So now here we're looking at a daily chart of the S&P. Just kind of threw in some arrows where we went to officially bearish on the market from our market timing perspective was on June 3rd, I believe, at 1377.66. Did hold that official discretionary bearish bias all the way until we actually added to it. Short-term profits were taken somewhere around here. I can't remember, but we did add to it our official market timing perspective, suggesting more selling around 1277. So about 100 points there. Carried the whole move actually from an official standpoint, but definitely wanted to add in some bearish exposure right there for another, 300 points or so, we'll call it, until we moved it back to official bullish on this day at 899. We just had to take advantage. There were no indications other than price movement to suggest that a bottom was there, but we did make the move at 899.22 on October 10th. Of course, how can you not take a bottom in the first or second week of October? So that's what we did, and that's where we're holding 873. That position is still relatively neutral. We did, as mentioned, get the two-bar key reversal buy set up at a close of 800.03 on November 21st. Great opportunity to add to long exposure. It was, particularly on the follow through the day prior, the day following, which was a Monday. And so that's where you have it, just kind of chopping around. ET sell signal right there, but just wasn't able to hold. Reversal right there, just still choppy. So although predominantly every measure from a trend following perspective remains bearish, we are short-term bullish from a price technical perspective, given the extreme move and the two-bar reversal buy setup. We remain officially bullish. That's not been negated as of yet. From a momentum perspective, we're short-term bullish. Very impressive divergence was this move right here. If you saw, very impressive divergence at 803 for the two bar reversal buy setup. So very strong divergence. A new low in price here, but a new high. We'll say a shallower low in terms of momentum. So we really look for these, have for many years, look for these strong divergences. That is textbook. Short-term neutral from a directional perspective amidst an intermediate term neutrality as well. So that's where you have it. That's the market right there. And we'll go ahead and look at some of, let's see, we'll pull this up right here. Just wanted to maybe pull up a couple of these charts. Some of our charts. Look at these. Look at the Evo right there. Look at these amazing moves we've seen in some of our day traders. We'll just move that over a little bit. Look at these. Mini Dow Day Trader 1.0, the Evo. Again, these systems have been ongoing for years, unchanged, although we did, and we'll notice in a second, we'll look at our portfolio returns, updated portfolio returns. We did have to adjust our stops recently. Mini S&P Day Trader 1.0, R2K Day Trader 1.0. Just look at that move, $5,000 to $8,000, $13,000. And we'll call it, actually we'll go from here just in September. So this move that we've seen in the market has just been outstanding in terms for our systems, particularly most notably our day traders. There's the Russell system 1.0. That is probably our oldest system. We started off with 4 in 2003 or 2002, 2003, and unchanged, still continues to rock with a $50,000 gain in just this year. So the R2K system 1.0, there's the 2.0, R2K system 2.0. Here's the S&P system 2.0. Hope you guys can see that. Just very impressive moves there for the market. Oh, did we look at? Yeah, we looked at our day traders, and just go ahead and pull some of these up. Yeah, I guess we need a strategy. There we go. Day Trader 5.0, just amazing moves. 6.0, just wanted to show you guys a couple of these. 8.0. Let's see if there's anything else we wanted to look at. Maybe the grind. Grinding out profits. So there you have it. We're going to go ahead and switch over now to our portfolio returns. We do have these updated. They're on the website under 2008 portfolio returns. You can have a quick reference guide right here. You can go ahead and subscribe to whatever portfolio you're interested in. Delta Black, Matte Black. This is our Matte Black 2.0. Very impressive. 715% return, 28% max drawdown. We really need to look at our average drawdown, 6.33% in terms of these portfolios. Just take your time and peruse them. But because if you'll notice recently, like for instance, here's the Matte Black, big drawdown was the case, an inordinate drawdown we should say, given the market turmoil, but as you can see, making stellar profits, consistently high returns for each month. But you really need to look at the average drawdown of 7.929% over the term, because this is going to be an unusual event which merits good returns, but with some undue risk. But look at the eye-popping returns. Look at that for Swinger DT version 2.0. Absolutely amazing. Our Delta C, we don't really promote this portfolio that much. In fact, I don't even think it was on the website, but definitely a great portfolio, and certainly as you can see in the numbers, very nice portfolio is the Delta C, a $50,000 portfolio. Map DT version 2.0. Here are our Map DTs. We actually do have a new one, the 4.0, high risk, high yield with return of 1,500% against 91% risk. But the other 4.0 is a $50,000 4.0, and you can look at it right there. If you have any questions, feel free to give us a shout on the website, chat with the support team, and shoot us an email to admin@MiniAnalyst.com. We hope you're having a great week. We'll see you next time.